concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Well, if you want to know what the fall may bring as far as the stock market is concerned, our chief equity strategist John Blank says you have to look to the road ahead. He joins me now via Skype. John, you're going to give us the spoken word, I'm assuming, on the signposts that you see as far as what may lie ahead for the stock market, right?
Yeah, Terry, we've got three issues that we got to watch out for to get the stock market in the United States up the hill even more than has already come. First off, we got to watch out for valuations. The S&P forward valuation is 17 times earnings, which is high. I mean, the historic average is 14.5. So we're on the upper end of things, but I wouldn't call it overvalued until we get to 25 times earnings. So what we're doing right now is rising on valuations and not earnings, and that's just because the risk is falling off. And that's going to get me to rest my other 2 points. The risk has got to keep falling off, and we got to see that the risk is falling off elsewhere, and that means the Russell Small Cap 2000 index has to keep rising. It's over 1,200. We need to get it all the way to 1,300. That's going to tell us that risk off is still on and still moving forward, and that valuations like this can happen for the large caps. The third thing we've got to watch out for, Terry, is the PMIs in the manufacturing center for the U.S. particularly, because it's the U.S. slowdown to 1.5% GDP growth that's holding back earnings, and that's really the strong dollar and oil and all of that's rolling into manufacturing. So we are seeing a pickup in manufacturing now in the United States. We need to see that continue, Terry. That's what we also need to see.
Oil price fluctuation been keeping the market on edge here through the summer. What do you see for that?
Terry, I think oil prices, you've got an inventory overhang. The Saudis have poured a year's worth of supply in the market to keep that inventory overhang. So what you got to worry about here is that this is not macroeconomic, and that there's a flat profile to oil, and it just range trades down to $35 up to 50. That'd be my range. So if you're at 45 now, Terry, you can go to 35 before you get to 50. But the 12-month look ahead, if you look at from a London consensus, is $50 to $55 a barrel on oil. So at some point, we're going to get a turn this fall in oil, but I think we go down before we go up in the range.
We've been seeing diminishing volumes as well in the market. Does that concern you at all?
Not right now, Terry. I'm concerned that if it gets into September and October, but those are when people get back to their offices and start trading stocks. Right now, before Labor Day, this is a pretty normal pattern, so I wouldn't worry about that.
Finally, there's a Fed meeting in September. Any change there?
Terry, I'm looking at 25 basis points on the Federal Reserve as a hike this year, and that can happen either in September or December. They're not going to do it during the election period, but they can have two ways of looking at it. One is to do it in September, get it out of the way this year. The other is to wait till after the election and do it in December. I'm agnostic, and I think investors should be agnostic about whether or not it happens, because it's a good news, bad news thing. If they move in September, they won't in December. If they don't move in September, then we got all more prognostication all the way to December about the next move. So, in many ways, it would be good if they did it in September and get it out of the way.
Talk to me about sectors here. What do you view as the winners?
Terry, it's always going to be the healthcare sector, number one in this market. That's the demographics of a slow growth market with a lot of aging people. You got to like the healthcare sector. If a stock I like in it, the WellCare Health, it's a big HMO in the Illinois Midwest area. So take a look at WellCare. If it gets a pullback from down, 15%, 10-15% on some kind of crisis or some kind of valuation worry, that's one we're going to look for. The other one I like is Infotech. The semiconductors have continued to be hot. The Internet of Things globally is going to make a big difference wherever we're going to go. And so you got to like Infotech. And the name I like there, Terry, is a name called Qorvo, Qurvo. This is a semiconductor for radio frequency. So it's kind of like a wireless kind of thing. Third thing I like is materials, Terry. Material sector, because China manufacturing is turning up, U.S. manufacturing is turning up. We've got a bid and some support for the fundamentals on materials, and that's driving up prices across a range of commodities right now, hard industrial commodities. So you got to like Cliffs Naturals. It's a low price stock. It's a U.S. stock, and it's so cheap, and it's got some momentum now. You got to like that stock. So I like three stocks: WellCare in healthcare, Qorvo, semiconductors, and Infotech, and I like this Cliffs Naturals in materials.
All right, there you have it, the spoken word on the stock market with John Blank, our chief equity strategist. I'm Terry Ruffalo.